Greetings, everybody. This is Jeff Scott. It is 9:30 on the 17th. This is my top-down review. I'm doing this in beautiful 4K. I've started doing this the last couple of weeks. It makes my life much easier because I have to move everything around and resize them if I change resolution. Since I've had no complaints, I'm going to stick with this. I think that on YouTube you can still download in various resolutions. I entitled today, Will Emerging Market Risk Deter Dow 30,000? Who would have thought when Donald Trump took over as president with the market around 20,000 that before the end of his first term, we will hit 30? I think it's inevitable now. The question is, will emerging market risk, and I don't mean emerging markets, I mean risk in our market, deter that assault on the Dow 30K? Disclaimer, as always, this is for educational purposes only. I'm a doctor, not a broker. I am independent. I pay for the tools that I use, and trading involves risk, and you and your loan are solely responsible. When I do live education, which I don't do frequently, I call my sessions Be Your Own Guru. I think it's important to study, to learn, to read. By training, I'm a physician. I don't practice anymore, but 4 years of high school, 4 years of college, 4 years of med school, 1 year of internship, 2 more years of residency, and 4 years of fellowship. So at 32, I was done with my schooling. How many of you put that much education into your trading? And the answer is hardly anybody. But you're putting all your retirement money in your future. So I think getting education is important. I started as a student of Cancelin that was improved by Morales and Katcher, taken to the computer by Ian Woodward. Here's his partner, Ron Brown. We lost Ian a few years ago. Van Tharp, Position Size and Money Management. Cigar from Superior Profits, got some great tools. Here's my buddy, George Lee. I did do some live trading a couple of weeks ago with him in Vegas. And then the person that really cemented how I trade, how I make money, is John Person. These are a couple of his books. So I learned from all of these. I put together what works for me. I own a lot of programs. You'll see that if I show you my desktop. TradeStation, Thinkorswim are critical to me. I have a number of indicator packages I use. HGSI, best tool for certainly end of day analytics. And you can use it intraday with a slight delay. EdgeRater, a great tool that actually supplements what I do at HGSI and speeds it up. Speeds up my analysis. And then I do follow seasonality in other programs. HGSI website, you go here, it says free 30-day trial. You can get that without a credit card. And under here, investing strategies, you'll see hundreds of videos by myself and others. Stock patterns are cyclical. We have really been in a challenging market despite the gains of this year, where you get periods like we are today when it feels like it wants to go to the moon, and then next thing you know, we're pulling back and feeling like we're going into stage 4, and before you could even start to short the market, it starts to go back up again. So it's as if we've truncated the very top of this pattern, the Weinstein stages of trading, and we just keep going higher, but each higher is associated with a pullback. So right now, I'm waiting for that pullback. I think we're going to get one soon. I'll show you the evidence to support that. But my guess is we'll still be higher by end of year. That impacts my trading. So I've been buying stocks, buying calls. I still have some cash, and I'm less defensive, but I'm prepared to go more defensive if my thoughts that this market may take a pause to refresh come in. And that's an important point to make. I'm expecting a pause to refresh. I'm not necessarily expecting the markets to crash. On Friday, these are the various sectors broken out, starting down here: materials, energy, finance, industrials, technology, staples, discretionary, and so on and so forth. When you see data not available, it means they've either been taken out of the sector, or more likely went through an acquisition, and I update this every couple of months. But you can stand back and say there's a lot of green there. I mean, there was some weakness in materials and maybe some in staples. But for the most part, green. And look at healthcare. Trump made a rather anemic comment about healthcare reform and transparency. and the market's rebounded significantly, especially payers. Major markets tell a story here. This hasn't. Sorry for my dog. It hasn't changed much over the last couple of weeks. This is a pattern that you'll see over and over again that goes back to December of last year. Actually, it goes back to a year ago last year. And you see the low on the first day of the left and the high on the last day on the right. So that means we're at, not only are we at annual highs, we're at all-time highs on the E-minis, NASDAQ, and the Dow futures. What can you say? We broke out of resistance. We have nice green bars. We'll have to look at how extended we are when we get into TradeStation. NASDAQ, almost the same story. Lower left, upper right, breakout new highs. Dow futures, let me fill out the page. Lower left, upper right, all-time highs. Boy, if your account's not up this year, all I can say is you've been probably short when you shouldn't have. This is the small caps. Now the small caps look different. Well, first thing about the small caps is they're up in short-term resistance here. This is an area that they've reversed from. That's kind of a potentially concerning here. They're nowhere close to their all-time highs. This is the IWM, not the futures. But they're considerably off their lows, kind of in the middle. So that's kind of the fly in the ointment, is the small caps are underperforming here. The VIX is getting down to the level of complacency. And the dollar is kind of, it's in a, we'll look at weekly in a second. It's in an uptrend since the beginning of the year. But for the most part, over the last several months, it's kind of been going sideways. Now I can flip this and look at the weekly charts, but in the essence of time, I'm going to go back into my presentation mode. And you could see the lower left, upper right. You can see that we're not up at highs on the Russell, sideways on the VIX, and upward moving, but still pretty sideways there. And I may have just, I don't think I showed you the weekly. Even if I did show you the weekly, it all depends on where I cut off the time. You could see how bullish can these top three markets be. Rates eased this week on both the 10-year and the 30-year. Hard to see this, but trust me that this blue line, which is the flattening of the yield curve, became less flat again. You're not hearing much talk about recession anymore, are you? AD lines in white on the small stocks, on the big stocks, both setting new highs. Notice how the small stocks, as indicated here by the IWM, are lagging. The large stocks are outperforming. Again, that goes the same as the indexes with the Russell 2000 lagging. The NYSE AD line's a little bit more confusing this week. Rates dropped, so this light blue we saw. Bonds pick up. We're still at all-time highs on the NYSE AD line. Maybe some challenges here as transports and IWM are starting to roll off while diamonds, Qs, and spiders just keep going to the moon. So they're starting to see some divergence in the market among the various indexes. Breadth, stocks above the 200, stocks above the 40, also high, but not at extreme and overbought levels. And in fact, the 3-month new high, new low, the T2121 on TC2000, up on the week, but still well below areas of anticipated reversal. Now, this is the fly in the ointment. We have broke out to new highs on the S&P. We are having clear divergence on the McClellan oscillator. If I look at the weekly, same thing, divergence on the oscillator. So that's something to watch. So, all in all, the market is looks great. The divergence on the oscillator might be the first flaw. The lagging of the Russell, also concerning. Current buckets, 2/3 of the stocks in S&P 1500 are above the midline of the Bollinger Bands, but very few stocks above or below. No signal there. Strong market appearance. Another fly in the ointment is our friend the Hindenburg is back. The good news is you only see these when the markets are approaching highs or at highs. So that reaffirms where we're at. But we had a series of them on the NASDAQ this week, which is not the classical market. And although my all NYSE was not positive, when you look at just the common, and thanks to Chris White of EdgeRater for creating that file, you can start to see the Hindenburg is approaching there. It is not a lack of new highs. It's just the new lows are increasing. For those that are newbies, a Hindenburg omen is something that was introduced to us by Ian Woodward, who has sort of resuscitated it off the pile of old indicators. It's sort of a signal that the strong hands are selling and the weak hands, which would be the individual investors, are buying. It is present at market tops. Only about 25% of the signals are significant. When you start to see multiple ones together, you should be paying attention. Since it does not show up on the all NYSE, it will not show up on my HGSI chart. George, if you're listening, we need to do an index option of all common as well. Market tone, which is down here, decidedly bullish. Sector rotation, the weakness in the sectors looks like it's discretionary. I'm sure Amazon's not helping there. And the canaries in the coal mine, which are these big stocks that have been market leaders, obviously Priceline's called booking now, but that's into effect, actually ran up and just about touched prior highs. If this market is to go on and hit new highs, I would anticipate seeing the canaries breaking above that black line. Failure at this line probably means the market's going to pause. Now, this comes from sentimenttrader.com, of which I subscribe and have their permission to use it. And what we're looking at here is the smart money, dumb money confidence. The red is the dumb money and the smart money is the blue. When you get to extremes, one should anticipate that the markets are going to reverse. So we look up here where my arrowhead here is of May 19th. The dumb money was at all-time highs or recent highs, and the market up here, the S&P, reversed. You go back to January of 18, dumb money is up, the market's reversed. Hard to see it as much here. There was a pullback back here in 2017 as well. Well, look at where we are. Dumb money, smart money. Are we expecting a reversal here? I'll leave that to you. Know your news and earnings. I looked at this. The news is mixed, low to mixed this week. We got some energy. We got some Philly Outlook, jobless claims, the weekly jobless claims. We do have some Fed head speaking, and we have FOMC minutes. So I guess that would put that in the intermediate risk category. And if you look at earnings, a lot of stocks here, not a lot that I own, but you got to know when your stock's earnings are. Kohl's looks kind of interesting, as does Medtronic, but I probably wouldn't buy things going into earnings, as does Target as well. You are clearly throwing the dice buying in front of earnings. Typically, if I have fat profits, I might take some off the table and hold some into earnings. If I have a loss or just entered a position and haven't made anything yet, I may consider coming off. Earnings have been strong. Earnings beats have been rewarded, but as always, earning failures have been clobbered. This is actually a Econo Day now, not Bloomberg. I forgot to change that. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? It was another great week for the bulls. Market continues to set new highs, at least on everything but the small stocks. We're starting to see signs of an emerging top. Hindies, elevated dumb money levels. I'll show you the high jump in a few minutes. Yet still finding stocks moving up off support. News flow continues to whipsaw, whether it's China deal to be or not to be, impeachment, debacle, Syria, Turkey, left assault on the wealth, Brexit uncertainty, and seasonality is strong as we move into the holiday season. Would not be surprised, however, to see a pause here, maybe for a week, and then a move into Thanksgiving up. I am keeping long and not shorting actively yet on this market. I'm watching my signals so I can reverse my stance. So let's take a look at my top-down review and then see where we go from there. So if I look into TradeStation and I go into this view here, let's look at the E-minis, which are here already. And here's about 6 things that I look at every day on every index. It takes me 2 minutes. First thing is, are we in a John Person buy, daily, weekly, and monthly, or are we in a sell? So we're in a buy in all 3 time frames. Second thing is, are the paint bars green, which is bullish, and I could be going long or holding? Are they red, which is bearish? I should be going short or holding. Or are they blue when I can do whatever I want? We got green, 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 so bullish all around here. Third thing is, where am I in the channel? This is an auto envelope from Alexander Elder, and the thing I've learned is it can ride up the channel. So we're riding up the channel on both the daily and the weekly. Bullish, a little bit of risk. Fourth thing, and probably the thing that's most concerning, is I look at these red dots. You can see the red dots last for a while, and then you get a sell-off. We now have MACD divergence concerns on the daily and the weekly. The purpose of these dots, as I've shown before, and I'll show one more time, is so that rather than having to think, let me take a trend line and say, gee, we've got clearly have higher highs. I don't think anybody can doubt that if I look at it, I do not have higher highs on the MACD. So that's a clear-cut divergence and something that might suggest that a top is coming. As I've said before, this can go on for some time. I look down here at the weekly bongo, which is the middle set of dots, and that's green. So everything here looks really bullish. My concern is we are at 96 on the high jump bar. That means if I go back on a year, that the level of extension as measured by the delta between price and the 17, the price in the 50, and the price in the 200 over the last 200 bars is 96% of the highest. When you get to be the highest high jump, you usually pause and let that work off. So I'm seeing a big run up. I'm seeing divergences. I'm seeing 96. We're going to pause to refresh or pull back here soon. I'm not going to front run it because overbought markets seem to get more overbought, but there is a concern there. If I look at the Dow very quickly, everything's going to be similar. If we come down here, we're at 93.49. If I look at the NASDAQ, we are at 92.63. And the weakest market being the Russell is at 80.63. And you can see it's pulled back some. So I think caution is warranted here, but I'm not giving up my longs until the market gives me a signal. Now, this may seem repetitious, but I personally get value at looking this in different programs. Let's take a look within HGSI at the major markets and then drill down from there. Let's look at the top-down view. So these are 25 markets that give me a sense of what's going on in the market. This is the top-down view, overweights Friday, then the next 5 days, and then very little for 3 weeks. So it's a short-term momentum. When I see the 50 Innovator IBD fund there, I know growth stocks are doing well when it's number 2, followed by biotech and NASDAQ. So let's take a look at what we see. And again, I'm doing this in 4K. 4K monitors are cheap. Allow me to show much more on my desktop. And I think it makes it easier to see what I'm doing. So I'm sticking with 4K. If you find this to be horrible, then let me know. And I'll probably still stick with it, but I'll just feel bad about it. This is my index view, or will be in a second. If you are new to me and wondering what all these little paint bars are, then you need to email me at hgsidoc@gmail.com, and I'll send you a series of videos that review my methodology. Green is typically good, blue is like green, and red is bad. So I could look at each index and draw this line. HGSI, if I hold down my shift key when I'm ready to draw, let's draw it right here, I get a straight line as long as I take my finger off the mouse before I take it off the shift key, and we have broken through resistance. Hip hip hooray. Is this an exhaustion gap that occurred on Friday? It might be. We'll have to see. So what can you say? We're married to the top on the high jump bar, no surprise. All my indicators are green. What would I expect to happen here? I think it would actually be bullish to see the market do some backfilling here. That would not upset me, probably would not get me out of all my positions. This would be a problem. And it wouldn't, if we were going to break down, I would expect to see something like that, not just that. Or do we just go sideways? I think that the most likely thing is we're going to go sideways, maybe retest prior resistance, which turns into support, and then we'll get to 3,000 and probably get to 3,000 maybe in December if I was a betting person. That's not to say that we don't see a bit of a correction first. This is the S&P 500, the Dow Jones Industrial Average. I can do the same exact thing with my lines. I can if I open up the drawing tool at least. Break through there. All right, this is what happens when you forget to take your finger off the mouse. Try this again. Make this a line. Same exact pattern. Oh, I did it again. Well, you get the idea. If I go to the NASDAQ Composite, same pattern. And if I go to the Russell 2000 ETF, not the same pattern. Now, the interesting thing is, one could almost argue, whoa, we're right underneath prior highs. No, that's recent resistance, because if I go and look at a weekly chart, you can actually see prior highs are up here. So we're nowhere close. So this is definitely a different market than the other markets, and perhaps another fly in the ointment. Now, I typically then jump down and look at the dollar index, and big run up on the daily. Now this is the dollar index ETF, the UUP, which is different than the futures. Been sideways for months, sitting on the 50. Doesn't look particularly strong right there. The VIX, down in the bottom of its range, down here, kind of where it's been ending up over the last several months. It can stay low for a while, but when it starts to go up, you'll want to be concerned. And if the dollar is kind of doing nothing, is gold going to be doing the same? And gold has been in a downtrend, but over the last week has kind of been holding steady. My wife just sent me a note that we should retire here. Sicily, Italy. Okay, I'd go retire there. I'm not Sicilian, but that would be interesting. Have to see what their capital gains tax is. And silver also bouncing around here. Now, some of the reasons to be bullish. This is a managed ETF of the IBD 50, and look how it's breaking out here. Well, maybe breaking out here. It certainly has come off the bottom, and in an uptrend, did have a gap on Friday. That's exciting. Biotech, like the rest of healthcare, had a good day on Friday, as you could see here. Sideways markets for a year. Oh yeah, down here, almost back to the highs. This is where the year started. Sideways markets, tough market. All right, so that gives me a sense of what's going on. Now, one thing that I do that I don't usually show you, I've got a few tricks up my sleeve. TC2000, I've programmed it for a lot of things, and my favorite thing I've programmed it for is to scan for stocks that have triggered the high jump up here, or the low jump, which is the extended to the downside, and then fire off a reversal candle, in this case a green candle low. A couple weeks ago I talked about Shopify, maybe not even 2 weeks ago. I don't think it was maybe it was Sunday, or maybe last week. And when I see a stock pull back to major support, the yellow being the 200-day moving average here, trigger a a low jump, which is that yellow dot, a reversal candle, I could have predicted, and frankly I did during the day here, that this was going to go back up to its 50-day moving average, and it did. Another one that I bought recently on the same pattern, held it for only a little bit, was CMG, where it came down, hit the 200, green candle low after a low jump candle, and ran it back up here. You got to take profits right away, but you can make good money in a very quick trade. So I'm constantly scanning the market during real time, and what I thought was interesting this week was the number of MLPs that seemed to bounce. Here is Enable, there's Goldman Sachs MLP Fund, GMZ, Kanye Anderson MLP, Fiduciary Claymore MLP. So I'm thinking maybe MLPs with their big interest rates might be something to look at this week. All right. Once I've done that, I go into, and this is what everything I've done thus far, and we are, let's see, we're 27 minutes into this video, but when I do this real time, I'm done in about 5 minutes to this point. Now I look at number 7 here, which is the industry groups at warehouse. They pop over here. How many industry groups, are moving to the upside? I've got 68 to the upside. On very quick review, and how many to the downside? I've got 8. So this market's bullish. What's not working? Precious metals. I showed you that. Home improvement, household properties, entertainment, home builders, mass merchants, and refiners. That's an interesting group. 5-day up, which is a longer term move up, 58. 5-day down, just to give a sense of a little bit longer window, 28 down. So this market is biased to the upside. So therefore, I'm going to be looking for longs, not necessarily for shorts. I order the industry groups by 2-day force. This looks at some of the movement, today's close minus yesterday's close times volume. You plot it. This would be the 2-day exponential moving average. So it's clearly a momentum. The challenge with this is it weights volume, which helps things. But to me, it's been a very useful tool. So I could say application software is the best group. And let's take a look at some of these. And I know that I like at least the second one. So Slack, I don't have enough data for a low jump bar. Let's just look at what Slack looks like. Did I close it? Never mind, I already closed it. But Slack, it's hard for me to buy a stock that's a falling knife. Does it look like that's changed? Yeah. Now here's my chandelier stop in red. If it comes through here, takes out the 50, takes out the chandelier stop, I might want to give some interest here, but I don't like stocks that are falling knives. So I would probably most likely skip it. But here's one I do like. That's not what I want. Hold on a second. See if that did it. Here's Cerner. So this is the quintessential pattern that I look for every day of every week over the last 20 years. And this pattern, although this one is not perfect, this makes me money. Let me pull back up my PowerPoint and show you a little bit of what I'm talking about. So I just did some live education. This is from that. And I talked about what are my buy points. And let me just review a little bit of what's on this chart. Where my arrowhead is here is the high jump. I don't think HGSI does the low jump justice, so I don't usually use it there. But clearly when I'm up at the top, as I am right here with the arrowhead, markets sell off. These are red candle highs, a reversal signal. If there was a green thing there, it would be a green candle low. The next thing down is a buyable gap up. Okay, Morales and Catcher. Then I have the squeeze, John Carter. Although it's only looking at the Bollinger Bands contracted within the Keltner channels, not looking at his momentum indicator that he's also added there. Here I have MOBO breakouts and breakdowns, David Elliott's indicator. Right here I have a industry group, shows you the strength of the industry group. These little red dots and little green dots are the Wilder PSAR. These red bars and the corresponding down here green lines or green bars is a chandelier stop. Read Van Tharp to learn about those. Then I have a series of moving averages. The skinny magenta is an 8-day exponential. The green is a 17-day simple. The blue is a 50-day simple. And the red is a 100-day simple. Duplicative here, this little arrow and this little line here is a indicator that I had created trying to mimic what my buddy John Person has done. It is not his indicator. It is similar. And as I've said before, I'm working with John to try and get his stuff as an add-on for HGSI. Hopefully it will happen, no guarantees. What I've got down here are pocket pivots from Gil Morales and Chris Catcher. Blue is a 5-day, dark blue is a 10-day. Reds are pocket pivots to the downside. They don't use pocket pivots, but it alerts me of volume, unusual. Here I have on-balance volume with what's called a Phoenix in red, a Eureka in green, and those are the HGSI follow-through days, the time to go in or out of the market. And on the bottom, I have regular volume bars, but these are called kahunas, which are bullish movement. Just the whole intent here is to look on this right edge and say, and I'll talk about these, mostly green up here, a Bible gap up, a mobile breakout, my indicator, and a kahuna. Well, that's a very bullish pattern. I want to go look at the chart. Now up here, I'm just going to talk about a couple of things. The top bar are the Hindenburg omens. They are not firing in HGSI because HGSI is looking at all stocks in the NYSE. Now, Chris White from EdgeRater made an interesting point and said that when the Hindenburg was thought of, the NYSE was more common. Now it's got a lot of preferred and bond funds in it. So if you clean those things out, you get perhaps a truer version. That's why there's discordance. Thanks, Chris, for pointing that out. The next is a weekly bongo and a daily bongo. These are a trending indicator that I developed with some of my friends. And what I like to look for are stocks that are in a green uptrend. And when they're on the weekly, when I get the daily in red, it's short-term pullbacks. So we've been in a downtrend for some period of time. So that would be one thing against this chart. Over here with the multiple colors, that's distribution. Green is accumulation, red's distribution, yellow's in the middle. I don't spend much time with the force index except for ranking things, so I'm going to leave that out right now. And here's my new indicator again. I just put it in 3 places there, so I'm trying to figure out whether it's valid or not, or just repeating something that I already do. So this is not a perfect buy because it's below the 50. I'm in a weekly bongo that's negative, but I would have looked at it because of the kahuna. So here's something from a couple of days ago. Here's a stock that was running up. It's gone sideways. The 50-day moving average has run back into it. The industry group's not strong, that would bother me. If I saw this candle right here, what would I have done? Well, let's see. My indicator turned positive. I'm in a squeeze with a mobile breakout. I just had a Bible gap up. Down here I had a pocket pivot and a kahuna. So I can look in this box, and that tells me within the industry group that this stock is in, even though the group doesn't look strong, 81% of the stocks are in a buy. That's very bullish. 4 out of 5 that had new signals were bullish. And then this is not the equivalent of John Person's HCD. I don't have permission to use an HCD, but it's a bullish pattern that I see that I based somewhat off of John Person's signal. That one's, and I'll talk maybe later or another time about John's weekly HCD, which is my ticket to paradise of profitable investing. Best signal ever. John Person's weekly and daily HCDs, especially the weekly. So this would have been a stock that I got interested in. Also notice that it took out its chandelier stop with this bar. The PSAR is underneath. And what happened? Well, the stock gave me an entry here. I would have set my buy stop if it traded above the high here. And this would have gone sideways a couple days and broke out. This is what I'm looking for. Prior uptrend, sideways move, breakout. Here is Air Product and Delivery. Big uptrend. Pullback. Notice during this pullback, there's not, very little blue signals here. In a squeeze. And what do we have here? We have a squeeze right after the mobile breakout signal, pocket pivot, kahuna, and I'm already got my buy signal fired. That's what I'm looking for. So when I go through stocks, I'm looking for specific patterns. Here we go. This is on my buy watch list for tomorrow. This might be one of my favorite charts of the day. I would set a target, I would set a entry on this stock. I'd want to take out the chandelier, which is at 73.28. So stock closed at 68.40. One could certainly argue, that shouldn't be something makes no sense. Hold on a second. Here we try this again. Stock, the chandelier is 68.92. I would probably put a buy stop around 68.95, which is up 50 cents from here, to make sure that the stock is actually going to move. A lot of times these stocks will go sideways, but I've got let me change it to regular view, not the index view. Sorry about that. I have my mobile breakout from a squeeze sitting right below the chandelier stop. My industry group is strong. I had a kahuna and a pocket pivot. 75% of the stocks are in a buy, 23 new buys, 4 new sells. This is a very compelling picture. I am interested in buying Cerner. I gave you sort of my guidelines, and I would probably do an option play. Where would I set my stop? That should be a question you're asking. So if I'm putting my buy just above the chandelier, which we said is going to be about 68, got to make sure I hit the right day. Guess what? On the daily here, it's already flipped the chandelier. Oh, that's interesting. So back up a little bit here. The close was at 68.40. The high was at 68.78. The chandelier on this view has already been triggered. So I would set my stop right above my buy stop right above the high, which will be at about, same thing, about 68.90 again. I would set my stop. I look at the lowest of the last 4 bars, 68.40, 66.96, 66.47, 66.26. Say I set my stop at 66.20. and I'm buying it at 69, I'm risking less than 4.5%. So that's the trade. Since I'm bullish on the market, I'd probably set my first target at 2 times my risk, take off half, raise my stop to break even, and let this thing run. What you're looking for is you want to duplicate what happened here. Bible gap up, mobile breakout from a squeeze. My indicator firing in a kahuna, and you got a very nice run. If it stays in the pattern sideways, I have a time stop. I get out. I don't wait. I give it a few days to hit mine and take off. All right. Winner. Here's another interesting one. How about Viva? Do you see a pattern here? Pull back to the 50, break out above the chandelier in a squeeze with a pocket pivot. I don't love the fundamentals here. It does make money, but it trades at a very high multiple. But this was a rah, cha-cha-cha stock, and I was in it in the past and got out too early. This is another buy point. So I like Viva. Next one down. Adobe to our... Here's Autodesk. And it's interesting. I don't like Autodesk because I don't feel like it's in an uptrend. This is sideways. This was in a clear-cut uptrend. This was in a clear-cut uptrend. I just don't feel the uptrend momentum when I look at Autodesk. For all I know, it's going to go much higher, but it's given a similar pattern. But notice how the 50 is below the 200, not as convincing. Sometimes I do what's called buying a bottom fishing buy, and this looks a lot like Slack, except this one's broke above its moving average. It's a high risk buy. Odds are it'll come back into its pattern and drop. It's an IPO. It's a falling knife, but has it reversed? Is this something to chase? Look at the demand here over, anything over 1 means it's in demand. Interesting, not my kind of play, but interesting. So here's a stock that I would not be chasing here. It's already at the high jump bar, but where I just moved my key, I had 2 kahunas in a row, big buy signal. Whenever you see that, sitting on the 50, breaking through a chandelier stop, mobile breakout from a squeeze. All right, so saw a couple of things there. So I would say that Cerner and Viva end up on my buy list. Next, I look at e-commerce discretionary and do a right click, change the index group. You look at this and you go, why the heck is this on top? Well, here's why. Something happened in the stock. Average volume is 4 million. It had 3 million shares, so a lot of volume came in. It was actually, hold on, let me get the right day, at 24 million shares. That's why the force was so high, and it was up 29%, although it looks kind of flat. Why? So I might do a right click, more info from web, and let's just open up fetch and see. What a great symbol. Huh. Well, I'm looking here to see a reason why the market popped like that. I don't see one. Well, for whatever reason, it had a big move. I don't know enough about it. I would skip it. JD.com, I don't like this red candle. So I don't see anything there. And if you don't double click the right way, Jeffrey, you get the wrong order. Let's see if I should get. Here's Netflix. This is the season of Netflix. see if I can find what I'm looking for. So I'm going to bring up Netflix here. Now, this is a seasonality indicator that I recently acquired. And you could see that when we get sometime starting around in here, which is early January, and frankly starting even back down here, November and December timeframe, one would expect a reversal in Netflix. Has that reversal already started? This is a weekly chart. This is a daily chart. It has worked for years. I think it's still too early to tell. I think the Disney competition, other things give me pause. But whether I look at it there or in Seasonality Trader, if Eric would ever spend time with this program and actually get its functionality working again, for example, on the searching, this is by far the best of the seasonality programs on the market. I just don't think the proprietor cares. And, I don't usually say things like that, except I've given him multiple emails and he doesn't seem to address it. He has fixed certain things, like I can now pick which earnings to set up. But if you look at Netflix, this red thing which we're here says that the seasonality is bearish right here. It's really 50-50 when I look over here at the score. But starting January 2nd to February 12th, 9 out of 10 years it's up an average of 32%. And I know that some of you have followed my recommendations there and made a lot of money. This year could be different. I have no idea. Alibaba, I am in Alibaba. It's starting to move up, but it's been mostly sideways. Mercado Libre, I don't like how much it undercut the 200, but it's moving its way back up. Certainly something that I'd watch, not ready to jump in. I missed this one. I've seen it right in this area here a couple of times, and I did not go after it. I guess I don't understand this stock, but here's an uptrend, pullback, 50 catches up. You get my signals, and it took off. I probably wouldn't be chasing it here. I'm looking for stocks that are buyable right now, and I don't really see anything that jumps up in that group to get me. Specialty Pharma, again, I mentioned there was some positive healthcare. Now, either last week or the week before I mentioned this stock, I did get a couple of thank yous. They already have a drug on the market called Vasepta. They're trying to get its label expanded, which means it's got to be paid for. And the label expansion was anybody who has high cholesterol on a statin, who has a risk factor for heart disease. It'll be everybody in humanity. They've got some great data that shows they can reduce dying from heart disease. It's a fish oil derivative. They had what's called a advisory committee meeting. The FDA put out some notes. The advisors meet to talk about it. The notes were not negative. The advisors voted 16-0 in favor of expanding the label. And sometime in the next month, I expect the FDA to expand the label. When that happens, the stock could be a $50 stock. I talked about it last week as being interesting here, and it took off. That is Friday last week. Let's see what we got. We got a Mobo breakout from a squeeze. The weekly bongo turned green. My indicator fired, and I had a bongo. Clearly, it was a iffy time because of the decision. This stock's going to go, I think, goes into a bull run here. Reata Pharma, this is what a bull run looks like. You missed it. Zoetis, an animal company, Bausch & Lomb, big run there. Here's another stock that I like. Now, you could argue it's already running and buy it right here, or you could wait to get some of my momentum signals. It has that weekly bullish doji reversal. Someday I'll teach that to you. I refer you to John Person. It is his best by far signal I've ever seen for anybody. This is Guardant Health. This is a leader in liquid biopsy for molecular profiling. I think this is a great company. Since I do business with them, I'll keep my mouth shut. Don't know much about Alkermes. I do see it makes money. So it's newly makes money, so that's pretty cool. It's sort of a bottom fishing buy, but I'm green here, so it means my long-term trend has started to turn up. Higher lows, higher highs. I have a mobile breakout from a squeeze. I'm sitting on the 50. I have a pocket pivot and a kahuna in a group that's strong. What's different between this and some of those other, like Slack that I showed you at the beginning? I've based. I am okay buying this here, recognizing that this 200-day moving average was resistance here and would likely be resistance again. The short-term chandelier is already flipped. The long-term chandelier is up around 24, 25. My guess is that it could run up from where it's at to 24, 25, and then it's going to have some challenges. I'm not against that one. Jazz, this is what you want to see. You want to see it break out and go above the moving average. Look at the strong industry group. Again, another company I do business with, so I'm not going to comment beyond the technical pattern. Consumer electronics. God, I don't understand this stock. I have 4 Roku boxes. My investment's $300. I have no monthly payments, and I probably won't buy another one for 2 or 3 years because they're already 4K. So maybe when 8K comes out, I'll reconsider. How does it? I just don't get it. It's not a content provider. It's more of a distribution media. But people love this stock. Hence to say, even though I had a signal right here, I didn't see it, and I missed it. I'm not in it. I made a little bit of money on the stock. Here was another good opportunity here with a Bible gap up, mobile breakout squeeze, and a kahuna. I wish I was in it. I don't understand it. It probably will go higher because I'm not in it. Dolby, when you see this kind of a candlestick, that usually tells me stock's going higher. It must have had earnings come out. The initial feelings were they were negative, and then the news came out, their conference call, and they closed at the high. That's sort of a belt hold signal. It's a bullish engulfing pattern going back 1, 2, 3, 4, 5, 6, 7, about 3 weeks. That's a very bullish candle. Dolby Laboratories, look at the earnings per share growth. Maybe I should bite my lip and reevaluate and work this thing up. Maybe I will. This here is what I call the magic line, and it's also a very powerful signal. This is from Chris Wilson of HGSI user, and one day he sent this to me and said, here is the red is the relative strength of the instrument, Dolby here, versus the S&P 500. So when it's stronger than the S&P 500, it's heading up, and when it's weaker, it's heading down. And then you put a moving average on it, and then when it breaks above that moving average, I found it's a great buy signal, and when it breaks below, it's a sell signal. So what did we do? We broke above. So I should pay attention to Dolby Labs. Infrastructure software. So a few weeks ago, and it looked like I was wrong, I was just early, I had a title, I think it was the 20th or 27th of October, and I said, will Microsoft lead us to all-time highs? And I thank you for nobody giving me a hard time, but then I would have given it right back to you because it has. Is this not my favorite pattern? Uptrend, sideways motion, 50 catches up, and what I'm looking for is this puppy right here. Kahunas, pocket pivots, my signal, mobile breakouts from a squeeze, and off to the races. That was on the 25th. Maybe that was the week I put that out there. The challenge with the squeeze, as you could see, for 4 months, 3 months, it did nothing. I love Microsoft. I have a big position in Microsoft. I'm holding Microsoft. Maybe too late to chase. That's your own decision. Log Me In, which I think is the next one eventually. There's some strategic initiative discussion. So this is news about either takeout, buyout, go private. Sometimes they work, and sometimes they come in and say, we're going to pay here, which is higher than it's been in the last 60 days, except for this bar, and the last people in, who are usually the people like us, end up losing money. CrowdStrike is one of these falling knives. 2 kahunas in 3 days. I pay attention. Mobile breakout from a squeeze. Doesn't make any money. My guess is it goes higher from there. Still not my kind of stock. Bingo. ServiceNow. I like this one here as well. Again, why? Probably early. Uptrend, sideways. I'd like to see a kahunas, a squeeze, a mobile breakout. So I'm not buying it yet. I'm putting it on a watch list. Major PE multiple. What about Akamai? I've got no issue with it. I'm surprised that this is so negative. Palo Alto, we were looking at a couple weeks ago. This thing has broken out and done well. Internet-based services. I love it. Uber, internet-based services. What can I say? I don't buy falling knives. But what happened on Friday? 41 million shares, 3% gain, hence it makes the list. 2.5 times normal volume. I'm looking for patterns. This ain't bad. I just got burned on this stock before. But earnings per share growth is negative. Big demand. Sideways sitting on the 50. Have to be in consideration. But I'm going to wait and see for some kahunas and momentum and proof that I'm not just going in a downtrending sideways move. This is interesting. Too far down the pattern for me, however. Trade Desk, it gave its signal a couple days ago. Volume came into the stock, 3.5 million shares there. Took out its moving averages, mobile breakup from a squeeze, my indicator and a kahuna. Probably not too far gone. Pattern recognition, that's what I do. Apple. I wanted to look at some of the leaders today, so let's look at Apple. I'm in Apple. I hope you're in Apple. I just have a bunch of calls and I roll them up and out, I've made 6 figures on Apple this year and I've never even owned a share of stock. It's the way I like it. Short-term gains, but gains nonetheless. At some point, Apple's going to take a pause to refresh. I know there's earnings coming out, guidance coming out, pushing it towards $300 from their mouth to God's ears. This is not a sustainable uptrend, but I'm in it to win, and it's going up, and I'm still in it. I did raise my strike price by taking some profits off the table and sold some calls out of the money to finance that. But I wouldn't be entering a position. It's a great stock to hold. It's a great stock to be in. Inferna, you got 2 days ago, Wednesday, mobile breakout from a squeeze. My signal, PSA reversal. That looks interesting here. Got to respect the fact that it was in a pretty deep downtrend. Notice where that magic line in August, back in here, actually flipped. Here's a nice, and I have not participated, uptrend audio codes. I've missed this on several times. You can only buy so many things. I need to start scanning for double kahunas because Ian told us that when you see double kahunas, it's a very big news. And look at what I missed here. Double kahunas occurring on the 50 with a mobile breakout from a squeeze. I can't catch everything. This would have been a big trade here. It's not sitting that way today. So I go through typically the top 10 groups. I look at the top several in each group. This is healthcare, managed care. They got a good big lift from Trump comments when he wasn't tweeting bad things about that ambassador. I'm not even going to say a word. It's got that bullish pattern on the weekly doji. It's got a kahuna and a pocket pivot. Everything's green, very positive. You know, it's getting up towards resistance. This big reversal, I'd rather see something that's basing. I'm not chasing, but if you were in United Healthcare, you were happy. Anthem, similar. Humana. Centene, I've been in and out of. This one's not run away a ton. They're about to do a transaction with WellCare Group. I like Centene. They just had such a big move. It's hard for me to chase these things. And none of them are giving you my setup, except maybe Tivity. And this is probably a laggard in the group. Sideways, finally breaking out here. It's got one of those belt hold moves here on Wednesday. Magic line was crossed. This might be something to look at. Tivity Health, TVTY. But you're probably buying the laggard, not the leader in the group. Life science equipment. The future is molecular diagnostics. These are a number of companies that are involved in that. I like this one, old name, Danaher. Not about earnings per share growth, although they do make money. Not about a dividend. To me, it was about a breakout here. Mobile breakout from a squeeze, occurring a couple days earlier. Bible gap up, pocket pivot, kahuna. Uptrend sideways. This is something I'm interested in. Is Danaher. Keygen is a takeout candidate. Thermo Scientific. Abbott Labs. This is sort of the old turtle stock of Ian's, one of these reliable stocks that paid a nice dividend. Abbott spun off AbbVie. To me, they pay a nicer dividend over 3. But here's a stock. Clearly, if you look at the weekly, in a nice uptrend, pulling back and breaking out off the 50. I would not be against that stock. I'm just looking for my pattern over and over again. All right. Number 10, we were going to stop is semiconductors. Boy, did Applied Materials lead. We talked about this several times over the last couple of weeks. Too far now, Bible gap up on, too far in my opinion, although there are rules to trade Bible gap ups. Lam Research, this group is so strong. I mean, here's potentially a buying opportunity on Taiwan pulling back into the 17. Still an extended stock near the high jump. Every one of these looks great to be owning, not necessarily to be buying here. You could probably be buying Integris here. You've got a sideways move for the last 6 weeks. You had a kahuna, pocket pivot, mobile breakout from a squeeze, and a clear-cut uptrend, make some money. All right, so I go through the top 10 groups, and I start to accumulate my buy watch. So now you know the pattern I like. These are the stocks that made my buy watch. And I'll see if there's any. I'm gonna click through them very fast. Let's just do it that way. Let's break them out by industry group. Arconic. This is in the airplane parts. Don't know how related to Boeing they are. It's already broken out. It's at the high jump bar. I look to buy this on a pullback. It's given multiple buy opportunities right here. Double kahunas. What did I tell you about those right off of here? I am not in it. I'm kicking myself in the ass because I looked at it multiple times. Earnings twice the PE. Aspen Technology. I think they make software for the insurance industry. Clear-cut uptrend. Pullback a little deeper than I want. I'd like to see it break above this chandelier, but I think this one is potentially reversing. It's got that weekly bullish doji reversal. Cerner we already looked at. Take Two Interactive, uptrend sideways. Break above this chandelier stop, I'd be interested. We talked about Viva. Copert, I am currently in this one. It is given multiple setups off of the 50. Double kahunas there. Double kahunas here. The Mobo breakout from a squeeze. If you own this one, you just hold on until it changes its color. If you don't have it, I'd wait for it to come back to the 50, which it seems to do on regularity. Agios Pharma, it's a biotech stock that I think that some of its parts are worth more than what it's trading for right now. It's sort of a bottom fishing expedition. CRISPR, another stock that doesn't have much in the way of earnings. It had a big revenue in September. I think that was a one-time licensing deal because I don't believe they have a product on the market. It's a place that I think you might want to have some exposure to over the long run in healthcare. They do DNA splicing, so they could fix certain diseases by impacting on the genetic material, not just measuring it. Buy it on pullbacks, not advocating it here. IGT, I spied this earlier in the week and took a position. Long squeeze here, and then on Thursday you had a Mobo breakouts, kahunas, and that looks pretty damn impressive. Look at the weekly breaking above the magic line. Fleet Core, here's my pattern. Uptrend, sideways, Mobo breakout, squeeze, kahuna. Set a buy stop above the price and don't buy it unless the stock moves out of its trading range. Coles, I mentioned I had looked at this, but earnings coming out this week, I would pass. Another in my pattern, uptrend, sideways, Laboratory Corporation of America. This looks very compelling, but it's a $200 or $170 stock. Restoration Hardware really looked great on Thursday, and then it looked so great that Warren Buffett took a position on Friday. Good earnings per share growth. If you've been to their stores, they are an experience. Look at the accumulation of 8.2 on Friday. We call that Warren Buffett mania. We'll see if I can get a pullback before I go into it, but I like Restoration, and I'd probably even get into it before earnings. ServiceNow, we looked at. eHealth, big runner, pullback. Now, you never like to see this bit deep of a pullback. Couple kahunas at the bottom and a reversal. This looks interesting. Thank you to the person that sent me the analyst report. Don't know anything about Zuora. It's an internet-based communications. Its fundamentals look awful. Why did I see it? I saw it because sideways move on the 50, broke its chandelier. Kahuna, pocket pivot, Mobo breakout from a squeeze. I would do more research, but I'm a pattern-based trader. We talked about Abbott already, talked about Danaher. Perkin-Elmore is another in the same life science equipment. I don't like this nearly as much because it's a sideways mover. That said, it's about to cross the magic line, and you got my Kahuna, pocket pivots, Mobo breakout from a squeeze. Verisight, this is another one in the same group. Uptrend pullback, sitting on the moving averages. I would watch this one. I don't see my kahunas and stuff, but it looks like it wants to break higher. We talked about Tivity. DHT Holdings, marine shipping. Look at the fundamentals on this. Really, something has changed here. Pays a nice dividend. I like to see it break out above the chandelier stop, but it kind of looks to me like it wants to go higher. Target. You know, if it wasn't for earnings this week, I've got a couple of kahunas in a row. I told you what that means to me. A pocket pivot, my indicator, squeeze, a recent Mobo breakout. This looks great, except it's got earnings this week, and you have to have your own opinion about what to do there. Medtronic, uptrend, sideways breakout. Signal was a couple days ago. It certainly has not gone too much since then, or may have not gone too much. I won't say certainly. Novacure, one of my favorite misunderstood medical devices ever. Imagine a patient who has brain cancer, a glioblastoma, the one that you think of that's instantly fatal. Reality is you got 6 months to live. And the doctor says to you, if you wear this funny looking thing on your head 16 hours a day, you have a 1 out of 6 chance of being alive in 5 years versus an almost 0 chance. Would you wear it? For some reason, adoption has been slow, I think mostly because the physicians don't think they would wear it. I love this product. I love the company. I have a holding in it. I seek to do business with them. Multiple kahunas. I think this thing goes higher. It had a huge run earlier this year. NovaCure. Catalent is in the devices as well. Uptrend, sideways, sitting. Immobile breakout from a squeeze and a kahuna. It's my pattern. Look at the group strength. Don't like how it's shooting away from the magic line, but I'd watch it at the minimum. I told you the MLPs looked interesting. Rather than buying the worst, which are the low jump bars, I looked at Kinder Morgan, mobile breakout from a squeeze, pocket pivots, and kahuna. Pays a 4.6% dividend. I let it clear that PSAR dot before I take it. ADP, it's got that person bullish doji appearance. It's in a strong group and breaking out. EPR, lower left, upper right leader. Great pattern. It's still a relatively cheap stock. Probably goes higher. Look at the earnings per share growth. Yes, you don't want to buy it here. You want to find this here. You want to get it down here. I let my indicators help me find the stocks that are doing what I want to do it. They don't tell me what to do. They draw my attention. American Homes for Rent, sideways after an uptrend. Brookfield Properties. I'd like to see something happen. I just saw the two kahunas in a row, and I'm thinking something's about to happen here. Let it happen before you jump. Equity Lifestyle, another lower left, upper right, but this one's giving you a buy signal. Mobile breakout from a squeeze. Kahuna right below the chandelier and the PSAR. Clear those and jump in it. That looks like it's going to go higher, 3% dividend. Store Capital, another nice lower left, up right. Limited brands, retail. A lot of retail stocks made my top list this weekend. I showed you Target and Kohl's earlier. L Brands has been a dog for quite some time. It's getting some kahunas and pocket pivots, mobile breakout from a squeeze. It looks like it's done going down with a weekly bongo green. Do you take a nibble here? High risk. Talked about Amarin, talked about Guardant. The next stock that I'm going to be watching for a news-driven pop is Heron. Heron has a new pain medication that a surgeon can inject in the surgical wound that gives you 5 days of pain control, and it's not a narcotic. And it allows physicians to use less narcotics, which is good in the current environment. They have some cancer drugs that are modest at best. Pay the bills while they're waiting for this. Sometime between now and June, it will either get approved or denied. The stock fell when the FDA wanted some more information about, I think, the manufacturing process. Does it return to that lofty level, awaiting an FDA decision? That's why it was an Amarin, something to consider. So we've now gone through top industry groups, my top stocks. I've showed you my pattern. I have some concern that when we're sitting here at a high jump bar of 92, 93%, you look back here when the market was topping. Should see a high jump bar there. Let's see, where's my high jump? 95, and the market rolled over. 99 was, obviously, you can't get much higher than that. And now we're over here, 92, 87, 89. We're just at a level where we're either going to go sideways or pull back soon, but it can get higher from here. Be careful. We're not at a place of no risk. News will continue to dominate. Happy holidays. I'll try and do one of these next weekend. Thank you, and goodbye.